Hello folks, I'm L.A. Little and this is your daily TA wrap. Well, we take a look at these markets from a neoclassical perspective and we ask ourselves, what happened today? And what does it tell us about tomorrow? I do a show 4 times a week. I do it Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of the beautiful Rocky Mountains. I usually do it live at 9 o'clock Eastern Time. Looks like I'm late today. Sorry about that. Kind of got distracted there and lost track of time. So let's get started. So what happened today? Well, we had the market pretty much a sideways little congestion, consolidation kind of move. We had the Dow down 40, 15,636, S&P's down 3, 1722, composite down, actually up 5 3/4. Apple was the big move that kept this thing up all day. 37.89 and a third, NDX 6.3 higher, 32.37, and the Russell lost 1.7. So you can see it was pretty flat. Percentages pretty flat. Nothing really happening here. You know, there was actually a thing showing gold up $60 today. It went in their trading room. There was a question late in the day about why is gold up so much and the GLL and some of these other things aren't even moving right. Well, because gold closes at noon my time, a little afternoon I think. I think it's actually at 2:15 Eastern time. And you know, that's when the Fed did its thing. That was when gold took off. So it looked like gold went up today when it really went up yesterday after the Fed meeting. And sometimes it's confusing as to what's really happening. But gold today was down slightly. We had silver down slightly. Dollar was up a little bit. Really not much movement. Today was a day of consolidation after a big move that took place yesterday. That's really all that was happening today. So if we pull in on the charts here to take a look at them and see what we got, you can see it here, consolidation at the top. Volume was lighter today. You expected it to be lighter. It actually was fairly close in terms of the volume compared to yesterday. This is an extended move, and you actually got a 2-bar reversal on the S&P today. 1729.44 was the high yesterday. You went to 29.86. Lighter volume. That's a 2-bar reversal. That says you should trade sideways to down the next day. If we look at the Dow Jones actually had a pullback, but it never hit the top. So the Dow Jones is pulling back, never hits the top. It's doing an immediate retest regen off this high, 1565.58. It went over it yesterday, suspect. Didn't get to the top today. It's inside that bar already, so you're already getting the retest right off this bar. That's got 1.04. It comes back with 1.1, a little heavier volume. I would expect this one is going to do a little bit more work on the downside. If we move over to the composite, the Nasdaq Composite. Here we went over the top. This was not as much of an extended move because you got the consolidation off those highs. So, you know, I wouldn't call this a 2-bar reversal. 37.98 was the high today. Yesterday it was 37.90. Today's close 37.89. So you can see you're under that bar, a little less volume. That would, if a 2-bar reversal, would argue for a sideways to a lower move tomorrow, but I wouldn't classify it that way given the congestion that has already taken place. If we look at the NDX, you can see here this one wouldn't even give it up. Yesterday's high was 32.35.72. You close over it 32.37. Volume just a little bit lighter. This, of course, was Apple. And if we go to the Russell, like the Dow, didn't get to the highs. That high was 1080.49. It's got as high as 1079.76. Less volume. This also had consolidation on the way up. So to me, this also, even had it gotten over, that wouldn't be a 2-bar reversal in my mind. So 2-bar reversal on the SPX. NDX still can go back higher. The other three are mixed, not telling us anything. One thing I would point out is that you've got ABCD structures up all over the place. You've got it here. You can see it fairly easily. You got an A point back here, B there, a pull back down to here is your C, and then a push up. Most of these ABCD structures on the daily time frames measure out about 1.5 to 2%. So you've got ABCD structures going on. Some of them confirmed, some not. This one is. Inside this ideal of some sort of a small retrace that's taking place. Okay, so that's kind of what the indexes tell us. And I really was busy today, so I didn't get a chance to run through all these. So let's run through them together and see what they look like. So let's go to the IYT first. See what that one's doing. All right, so you get over the high, suspect. A little more push today. So that was 120.32. And you closed over it. So that one can actually go higher. So that one's not even a negative. SMHs, it's not an ugly, wasn't a pretty finish, but that's the way it traded. This one is a 2-bar reversal. You had a little bit of consolidation, so I wouldn't call it a 2-bar. You went over under. This one maybe gets a little pullback, maybe not. I can't, when they're like this, I can't read them. Now, it has been a driving move. You know, that consolidation 4 days in the middle of it could simply be, read as enough of a pause to keep going and not really get your reversal on the 2-bar. So this one's mixed. This is a mixed signal. May or may not happen. XLB, and all of them pretty much have that little consolidation, don't they? Let me go back to the SPX. Let me convince myself that that really is a 2-bar. Yeah. See, this is where it's judgmental, right? I mean, you had a little consolidation, but it really wasn't much. I mean, there was no pullback whatsoever. You did go sideways for 2 bars. That's really, to me, not much of a consolidation. So I still would term that one a 2-bar reversal. All right, let's go back to the sectors here. Where do they go? Here we go. All right, we were on the XLB, I believe. So you had a little consolidation, you shoot up, you go over, under. You know, all of these kind of give you a little feel that they're going to try to come back a little bit more. But given, and here's another one, the XLE is doing the same thing. But given the ABCD structures that are in place on almost all of these, there's one there, there's one here. You know, you got your A point down here. Actually on this bar, your B point, your C point, you know, that says it's going to get over the highs before it's over. This one actually didn't even get to the highs today, so it's an inside day. Doesn't look, you know, you get pullbacks. You just had a big move. It doesn't surprise me they're going to consolidate. XLI doesn't even get back into the bar. XLK, that one actually did, but again, this was a consolidation. These just look like normal old retraces after a big move to me. Let's see what the safety sectors did. XLP, yeah, now that one actually did it. Goes up to test a high, fails, comes back. That is an extended move, right? That's a straight up move. This one should try to come back. XLU, I had a big move yesterday. That also, to me, is, given this sector, is kind of a 2-bar reversal. Should try to pull back a little bit more. XLV. Now XLV hesitated a little bit, not too much. That also looks like a 2-bar. All right, kind of like the SPX. And let's look at the last one, the consumer discretionary. And that's also like the SPX. That goes over the high. I believe it did, 61.75, yeah, it did. So that also. So there's about 4 of these that look like true 2-bars. The rest of them kind of mixed signals. A number of these, about 6 out of 9, I think we have 10 actually, but 6 out of 10 actually have ABCD structures up, 6 or 7 of them. So when I look at all that together, you know, the ideal, you know, what it tells me is, yeah, we can get a little bit more of a retrace. It's nothing big, nothing to get all upset about. It's probably going to be good if it does it. And it may or may not do it. Tomorrow's Friday, tomorrow's options, triple witching options, I believe it is. You'll get volatility off of that. It's a Friday. You just had a big move again. You've already had big moves. You know, I mean, September's had one down day for the indexes. So, you know, I mean, today was number 2. And so, you know, we're 3 weeks in almost. So, you know, you can't get very upset if it's going to try to pull back after a huge move off a spike off the Fed. So to me, it looks pretty normal. I don't see anything major here yet. Okay, UUP. So it goes under, over, back, up, more volume. That one can go lower. Remember, we were looking at the weekly last night. That one looks like it's going to find support down here. So I wouldn't be surprised to see it find support as it comes down, which was interesting because the FXE was a blowout move the other way. So a push back up to do a retest regen lower would make sense on the UUP. I don't know if it'd do it because you actually got more volume today at the lows. Let me see what the FXE looks like. And the reason I always correlate these two is because the FXE is 50% of the weighting. So the FXE actually held over the highs, tested back into the bar and held, even though it's a dark candle. That may or may not come back and do the retest off that high. What we did see elsewhere, though, and I don't have them all up here, but we did see elsewhere was we saw weakness in the pound and the Australian dollar, in the yen. I've got the yen up here. You saw weakness in these. I mean, look at this huge move up, and then they immediately sell it. And it's kind of funny. It's like, oh, don't worry, Abe can outdo Ben, right? He can do more weakening of their yen. So they got a spike up, man. Should have shorted that yesterday on the spike, huh? Knowing that they would fall back. That's kind of funny. Between the Japanese yen and the dollar, you know, you could probably, you might as well just burn the paper. Both of them are worthless at this point. The way they're being treated. Let's look at that gold market. We were talking about gold at, you know, actually was down today. So gold does kind of a 2-bar reversal. I would think you get a little push back down again tomorrow, given that setup. So you got a big spike up, right? You can't hold it. You're going into resistance, and even though you have the volume, a retrace and then a push back up would make sense. Let's see what the weekly looks like. Okay, so the weekly was a good test into support, but spikes back up on volume. You get over this high. So that price point is 130.51. And we traded at 130.175. 130.51 would bring us back a little bit higher than that. Yeah, I would probably go off that weekly bar, 130.51, as kind of a target on a retrace. Let me see what silver looks like. Yeah, same thing. And silver could come back to, on the weekly, it's about 22. So about midway through. You don't want to see it get too deep into this bar, because if it does, then it was all short covering, right? You want to see it kind of hang up here, halfway up or higher. You prefer it to be about 3/4 of the way up and higher, right? Just don't give me much back. And if it does that, then it's pretty strong. Let me see here. Let me look at bonds. Let's see what bonds did, because bonds were selling back down again today. They couldn't hold theirs. Now see, they're already down into the bar. You don't want to see them go much deeper. This is about as deep as you want. And what you're going to test against now is the top of this bar, 104.39, and it closed at 104.38. That's about as much as you want to see. You want to see bonds work higher, not lower here, to tell you that move's real. And if they do that, they're going to support equities. And I suspect junk bonds probably did the same thing, pull back some. Yeah, they did. So all over the place, you can see kind of 2-bar reversals, right? Here's one here. Let me go back to the TLT. It hasn't moved enough, right? It's not extended enough. The junk bonds were. Let me look at one more, copper. Let's see what copper looks like. Copper's still running higher. It wants to go test the highs. That's good. Let's look at the oil market. Yeah, and oil's just stuck up here consolidating. If you look at oil on a weekly, it's a cleaner picture, right? Nice big move up, Now you're consolidating, right? You tested this low again on the weekly and you're holding. You want to see it hold. Then you can go higher if you're bullish this market. Okay, so all that looks good. I mean, I don't see anything that makes me want to get worried. I think there's a good chance you could get a fast retrace. Fast in my mind is 6 bars on whatever time frame you're looking at. So if I go back to the general markets and I pull up the SPX, right? A fast retest regen would be that you come back to this within 6 bars. High is 1709, we traded 1722, so that's 13 points. That's not that far away. You can do it. Okay? A fast retrace has a higher probability of getting deeper into the bar, back to actually what is now showing as support. It redrew last night and made this support. And a fast retrace would get you back into that, and that would make sense, right? That's where you would expect the money to come in. Okay? Now, if it takes more than 6 bars, then there's even higher probability this thing's going to get bought. And if we go look at something like the IXC, right, the Nasdaq Composite, it's more than 6 bars, way more than 6 bars. This highest high was 36.94. Okay, the low we got on that retrace was 37.01. We didn't do a retest regen off those 3 highs that we broke out of. That also makes sense. When you break multiple swing points like that, it's hard to come back, right? They're going to buy the dip, and that's what they did. So now, if the Nasdaq were to come back into here, right, you almost certainly want to buy it. Okay, so that's something that's, you know, those are the kinds of things you want to know and you want to use, right, as the market trades. So am I worried? No. Could we get a retrace? Yeah. Can we get a deeper retrace? Yeah, we could go down to the bottom of the S&P bar and still maybe just get back to this retest regen here. Probably not even get there, right? So market looks pretty positive overall. Let's take some of your questions. One of the things I'm going to do is I'm going to institute a text messaging so that you can text messages in if you have questions and you're not logged in. You can just text them in to me. We'll institute that next week. I also will be taking next week, part of next week off, so there will not be a show. I don't know if we'll do a show Wednesday. I definitely won't do a show Sunday. I won't do a show on Thursday or Sunday, and more than likely not on Monday either. So I'm going to take a little free time off, regenerate my batteries. I don't know if I'm going to retest, but I'm going to regenerate and hopefully come back strong. Let's look at your questions here. So let me pop over and type these in right quick and take a look at them. So Disney, GDX, and TLT. Okay, so we can look at those. Let's start with what you got here. So Disney. I think Disney has earnings coming up fairly quickly, don't they? I'm not sure. I believe they come out fairly quickly in the earnings season. So Disney makes a nice big run up. It's back into the big bar. Now this one was a 2-bar reversal. This is actually a nice one to look at. Look at your highs. You go up into those highs. You push them with pretty good volume, right? So you're pushing 12.7, 9.7 at the highs. Volume over here was 16. You were pushing into it with 12. So your volume's lighter as you're going into it, and you're trying to take out 2 highs. You get up there to take them out, and what happens? You fail. You fail the break of the highs, and you do a 2-bar reversal off the highs. You see that? That says you're going to try to come back, right? And that's exactly what it does. And it does it while the rest of the market's breaking out, right? Which tells you the strength of the sellers up here. Let me pull this over and look at the weekly. So that bar's got 62.5. You come back up with 61. So you're hitting it with decent volume, but it's not enough to break it out yet. That also calls for a retrace. All right, so how far can it retrace? Well, let's see what we're coming back with. 11.8 into the bottom of this bar is 12.7. Check. That's a good sign. Oh, I looked at the wrong bar. I take this back on the highs here. I was looking at this bar. The bar, that was the down bar. The bar up had 11.5, and we came into it with 12, so that was actually good. Okay, but you spend a lot of the energy to get up there. You can't get over it, you can't hold it, and at the very top, you're not doing enough volume. Okay, you just didn't have it. 11.5, you do 9 at the top. That says you're going to retrace. That's what we're doing. Okay, so the bottom of this bar is 65.97. We're trading at 65.72, so we're under it. We're into this bar. Okay, so what you want to do here, if you want to buy this, which is what I assume you want to do, is you want to see if it tomorrow. You want to see if it trades deeper into this bar. If it gets deeper into the bar, let it come to the bottom of this bar, somewhere between your next zone. Once these redraw tonight, they're going to redraw on the bottom of this one and the bottom of that one. That's going to be your zone you want to try to buy in. So if you get deeper tomorrow, into this bar, which will also be into this one deeper, let them come back down into here, or as close as you can into that support zone. That's the buy, down in here. Okay? So that's how I would try to trade that one. Now, if it doesn't do that, if it just holds up here, right, consolidates for a couple days, then maybe it's not going to go down there, right? That just tells you it's stronger than what it's showing today. And the buyers are stepping it up at a higher level, and then you just have to take a smaller piece of it if you really want to buy it. Okay? GDX again. Let's look at GDX. So on GDX, this was the gold. Gold pushed. The gold was flat. The GDX actually pulled back deeper. All right. So okay. So I was talking to this morning. I was talking to the my TNT members, my members at the site, and I was telling them on the how to do the buys on these using your 15-minute bars. And I think I highlighted, I highlighted this little area, and look at it. It came right to it, folks. 2708. Yeah, came right. Sweet. Right. I mean, that was the buy. 2708. I don't know if you bought it there, but that was the buy. It was this little area here. You come back into it, you have less volume, you do. Yeah. So I think you might get another shot at it tomorrow, maybe not. I don't know how gold's going to trade tomorrow, but that was the buy point we were talking about. And yeah, it's set up that way. So what I'm showing you here is, let me just take all this off of here. Those things I talk about, right? They work on all time frames. They work intraday too. That's the support zone. You see how it comes into the support zone and can't break it down? That's your buy, right? You let it get in there. You see what it wants to do. It actually gave you a little 2-bar reversal right here. You see that? I don't know if the volumes are right. 26. No, excuse me. 1.8, 1.49. No, it actually had a little bit more volume, so it wasn't a clean 2-bar, right? And it actually wasn't that extended, but it does look like it did an ABCD down and also completed. You'd have to do the calculations, but it actually looks like it did an ABCD down. A here, B there, C there, down, right? It looks like it was almost at completion, if not. And then that, also, while it's doing the ABCD down, it comes into support, right? You put all that stuff together, it's not a bad spot to pick some up. Now, you didn't get the big run back up. You may get a pop in the morning, who knows? But that was the setup. And if you get it again tomorrow and it acts right, that's the setup again. Thanks for bringing that up. I forgot about it. Big bar at 2 p.m. Yeah, so what? I mean, if you're talking about this, it doesn't scare me. You're going to get volume at the end of the day. And actually, at the end of the day, that's not very much volume, right? I mean, it wasn't even as much volume as here on the spike up. So that wouldn't worry me. What do you think the index, what index do you think will be the strongest going back up? I told my members this morning that interest rate sensitive indexes, I would look at those. Looking to buy TLT for a trade and then short it when it gets extended, thinking that the lack of taper will not reduce the interest on the 10-year bond much lower than 2.7. Stanton asked. So if we go back to the TLT, I think the TL, I've been saying for a while TLT is probably putting in a bottom, and so I don't want to see it go much deeper here. You got a nice big spike. A lot of that was short covering. That's what it always is at the bottom. What you want to see though is you want to see the seller step back up and buy, right? You don't want to see them let it come all the way back down here. Now it may do that and still be putting in a bottom, but if you're buying here, you want to see it hold. So this would be the spot, right? This should hold right here tomorrow. If it doesn't, then it's still weaker than we think, and it can come test the bottoms again. You got to wait. And doing the same sort of thing here, if I go back, but the TLT, get this out of the way and get to my other graph. If I go back to here, do the same thing intraday, do a TLT, put it on a 15-minute, and look at it. You can see the zone. Let me just take this off. I'm going to put it on, bring it back more. Right, so you can see you got a zone right in here. There's one here. Wrong one. Let's get this one. The bottom of this guy and the bottom of that one. Oops. Right, that's kind of your zone. You see how I came right back to the top of that zone and it's holding it. Right, volume's not there. This is doing exactly what it should do. Those things work on all time frames. This one's working as well. Okay? If you're working different time frames, if you're day trading, if you're trying to do something like I'm doing here, this is my intermediate term time frame. 5 minutes is my daily time frame, my short term time frame, right? That's my short term time frame. And on a short term time frame, I'm not looking at 5 days. I'm looking at one. On a intermediate, if I do my 5 minutes here, that's my short-term time frame. If I'm doing it on a 2 days, right? I just want 2 days up. I'm doing 15 minutes. That's my intermediate term time frame. If I'm doing a long term, I'm going to put 5 days up and put it on 30s. All right, and that gives me another one. And you can use those in conjunction. That's your short, intermediate, and long. If and what you're doing, folks, is getting 60 bars to a chart, right? And those will get you close. Okay? All right, folks, I appreciate you being there. Hey, tell a friend, tell two for me. As always, I'm LA Little. I appreciate everything that you do for me, and I try to reciprocate with what I can do for you. Makes us both better. You have yourself a great night. I'll see you tomorrow. We'll see what...